So case study 3, I'm gonna go more in depth on the manipulative price action. Here, these two trades that totaled out to be a total of 10-1. So we're just gonna dive straight into it. So the very first thing, I woke up, it was roughly around about 4:30. The charts was here. So I had a structural leg point. That was the focus. I did know that this is CAD JPY, and we had approached the 15-minute supply zone. So I was just pretty much acknowledging price action and the reaction from this zone. So once I zoomed into CAD JPY on the 1 minute, this is what I saw. Frankfurt had essentially created sell side liquidity, and there could potentially be buy side liquidity above Frankfurt. I did not know at the moment yet. However, the reason how I knew that this here was sell side liquidity is because if you zoom out to the H1, this here was a wick, which it showed here. I can see that the close of this H1 here showed a wick, so that was potentially Frankfurt creating sell side liquidity. And I didn't know that this was buy side liquidity just yet. Now, let's dive into, I'm going to back up and show price here because I want to dive into the manipulative price action, the MPA. The whole concept behind this is the enticement. A low to create a high or a high to create a low, right? So all this essentially saying is that at the start of Frankfurt here, this is where the manipulative price action actually started, right? Because we had a scalp breaker structure to the downside. Here we could have had some liquidity here, which price ran and then broke structure. So this now becomes a potential supply zone. We had a potential supply zone here with the wick that goes back and mitigated supply here. This is just nice order flow and tag. So a potential supply zone. And then the last potential supply zone here. So now if we go to the next page here, you'll see that at every point here that was emphasized previously here, you'll see that at every point created a sell reaction, right? Essentially creating buy side liquidity above these highs. So at every one of these supply zones, there were sellers potentially trying to sell the market. There was selling pressure, right? Essentially creating buy side liquidity, which is why all of these highs here ended up getting ran. Now, the manipulative part is very broad and it touches all aspects and trading styles. We got a scalp breaker structure here, very impulsive leg here. And if we acknowledge just momentum alone, so you have your momentum traders, right? Momentum is to the downside. You got an impulse regression. Now let's put volume into the play. Volume and momentum both correlate. On top of the impulse regression, momentum is in the play to the downside. Now we have volume regression as well. There's no buying pressure, right? So whatever you would call this, Wyckoff theory or smart money or whatever, it's manipulating those concepts, right? This at the start of Frankfurt is actually manipulating those, right? So anybody that essentially tried to take a sell here got swept out and all that money here was captured. Now let's move to the next side. This is MPA of buy side liquidity of how. So now Frankfurt buy side liquidity is got took. Now let's talk about how price manipulates sell side liquidity. And here we'll discuss the traders that trade trend lines and patterns, right? So now on the sell side liquidity of things, as price was building up, creating that buy side liquidity, we was actually London was actually building bullish order flow. Price was started making higher internal structure. Price started making higher highs, higher lows, higher highs, higher lows in bullish order flow. On top of bullish order flow, you had a bullish trend line. And then from a pattern trader perspective, you had a wedge. So now you have a breakout. price essentially goes and runs London sell side liquidity. Now this manipulates a break of structure to the downside here, right? So now, if you're a pattern trader, pattern traders will be trading a breakout. Yes, you would go and profit, cool. But then essentially what you're doing is creating liquidity for price to go higher. You got your trend line traders, your trend line breaks, they're probably taking a sell here. Essentially the MPA, the manipulative price action, is just manipulating all retail trading concepts of the market. Because me, from the chameleons market, the whole concept is to trade as the composite operator, right? So with that being said, is we trade as if we are the ones controlling the market, right? So from that point, from here, I want to zoom out to the H1, because when I zoom out to the H1, one of my rules that are attacked as far as how do I know when sessions are simply to grab the liquidity is when I go from the H1, is when I go from the M1 time frame to the H1. And this here, the M1 is what you see on the H1 here. All the candle closures. Frankfurt buy side liquidity, which was here. You see the H1 candle closure. And London sell side liquidity, we see that we get the H1 candle closure here, where it runs that liquidity in that candle closure. So higher time frames, I'm on these smaller time frames, seeing the manipulation, using my higher time frame closures for my confirmations, right? So then from here, once I now have drawn all the narrative, the buy side liquidity is swept, sell side liquidity is swept. Now where is price intended to go? Okay. So now thinking of best available price, well, if we're taking sell side liquidity, right now price is in best available price to buy, right? So from there, my point of interest, 15-minute point of interest, 50% threshold. Now my target at the top of this start of this narrative, at this supply zone, you have to think as if I was taking a sell here, where would the stop loss be? The stop loss would be at the very top of the supply zone. So that just be an easy target. Here's my entry for that buy. So now that price has hit my take profit, I zoom out. I want to see where I'm at in price. So from a higher time perspective, I can see that we have my bearish leg here, and that over top of that 15-minute supply zone here, there is another potential supply zone. So from there, I zoom back in, and I put these green dots here so that way when I zoom back into the 1 minute, you can see my range of price that I was focused on. So from here, when I zoom back into the 1 minute, I can see how price approached that supply zone and how the volume essentially was diminishing. So the only thing I needed from here was just some form of bearish confirmation, some optimism for price to go lower. Which I had already got here. I could see as price goes back to retest this here. There was no buying pressure. So as soon as we went back to mitigate this supply zone here, and price gave this bearish engulfing candle here, I placed the sell there. Now my target was then London sell side liquidity. The reason being is because the catalyst that created this high was here, right? But now if we look left, and I can see that the retracement here was relatively deep, I wouldn't see no point as price to coming back here and returning higher, right? Because now it's to the point that, okay, where is the most liquidity in the market at this point? So I knew London had just ran sell side, had just previously ran sell side liquidity, right? So I knew that there could potentially be liquidity below this low. And here's the image for that sell there. Now, I'm gonna bounce back here real quick, because on the bottom of this London sell side liquidity, how you can always tell where there is liquidity in the market is for one, the higher time frame candle closures, and two, the reaction afterwards. So after we caught this sell here, I just put this next slide here really just to show liquidity. And literally right after we took this London sell side liquidity from the sell we caught here, you can see the reaction in price, and it literally just ran right back to that high. So that's um, a way to know when some is liquidity grab, because liquidity just essentially enhances the direction, and also the higher time frame closures. So the very last slide that I'm going to show is this from an H1 perspective, because like I said, I am on the 1 minute time frame showing the manipulative price action, but I'm always referencing back to higher time frame candle closures to essentially confirm my liquidity grabs between and correlating them with sessions. So from here, as you can see, the Frankfurt buy side liquidity that was swept here, the London buy side liquidity swept here, all the closures. This was the buy that we caught here, right? The reason that gave the confidence to hold this even through this was the closure. So it's just sticking to your rules, right? The sell that we caught here over top of this, right? And then the very last liquidity grab that was taken here. And then this green dot just shows this was a H1 supply zone that price just ran back into and just reacting off of from there. So that concludes the case study 3. I hope you enjoyed that. Manipulative price action, just going through the buy side liquidity, and also from there how price shifted and then run the sell side liquidity. Also discussing the different trade methods that traders can use within this and how it was essentially manipulating any strategy that you could have had, from volume to momentum to trend lines to patterns. It was just pretty much manipulating everything. So hope you enjoyed that. We look forward to the next one, and we're gonna wrap this up here.